the A, I just spit out some pretty wild numbers for XRP, and honestly, they're either brilliant or completely off the rails. Let's break it down. Here's where we are right now. XRP is sitting at $1.1505, down about 3.34% in the last 24 hours. Now, I know what you're thinking. Another red day, right? Well, here's the thing. Sometimes the most interesting opportunities come when everyone's feeling a bit worried. The trading volume is still pretty healthy at 111.65 million XRP, so people are definitely still paying attention. The big question mark hanging over everything is whether XRP can push above that $1.21 resistance level. That's the make or break point right now. So let me walk you through what the charts are telling us. The RSI is at 44.85, which puts us in that neutral zone, but leaning bearish. Not terrible, but not great either. Now, here's where it gets interesting. The MACD is showing some weakness at minus 0.0376. But wait, the histogram just turned positive to 0.0132. That little flip could mean momentum is trying to shift. You know what I've noticed? XRP is finding support right between those Bollinger Bands, sitting above the lower line at $1.0449. That's actually not a bad place to be hanging out. Here's what's really moving the market today. The dollar has been flexing its muscles, and when that happens, crypto usually feels the squeeze. There's this inverse relationship going on. When the DXY gets stronger, XRP tends to get weaker. It's like a seesaw, and right now the dollar is sitting pretty heavy on its side. The stock market correlation is also playing games with us. When the S&P 500 and NASDAQ do well, money flows out of crypto. It's just how things work these days. Now, this is where things get really interesting on the regulatory front. The Clarity Act is still the big elephant in the room for XRP ETFs. Here's the thing. All those XRP ETFs are seeing outflows right now, about $20.1 million flowing out the door. But, and this is important, if that Clarity Act passes, it could completely flip the script. It's like waiting for the starting gun at a race. Everyone's just positioned and ready. The mood right now is, well, pretty scared actually. The Fear and Greed Index is sitting at 15, which screams extreme fear. Now, I've seen this before, and you know what? Extreme fear often means it's time to start paying attention. People aren't searching for XRP much either. The interest is pretty low at 29. Sometimes the best opportunities come when nobody's talking about them. The big players are doing something interesting. Whale transactions moved 1.347 trillion XRP across 1023 trades. That's basically 99.9% of all the trading volume. These institutional players are clearly moving their pieces around the chessboard. The selling pressure from these whales seems to be what's pushing the price down right now. When the big fish move, the little fish feel it. In plain English, we're in what's called Elliott Wave C correction phase. Sounds fancy, but it just means we're still in the downward part of a bigger pattern. The Wyckoff analysis suggests we're in a markdown phase, which, well, it makes finding the bottom tricky. Think of it like a ball bouncing downstairs. We know it'll eventually hit the bottom floor, but it might hit a few more steps first. So what does the AI think? Okay, here's where things get really wild. Short term, like tomorrow, it's predicting $1.4663 with only 51.5% confidence. So basically a coin flip for the next day. But wait, for the next week, it's calling $1.7365 with 98.7% confidence. And get this, for the next 30 days, it's predicting $2.1158 with 99.9% confidence. That would be an 84% jump from where we are now. The AI seems to be saying the longer you wait, the better it gets. But here's what could go wrong. If XRP can't break above that $1.21 resistance, we could slide down to $1.14 or even lower. Those ETF outflows could keep accelerating, and with all this extreme fear in the market, panic selling is always a risk. Plus, remember those whales controlling 99.9% of trading? If they decide to dump, things could get bumpy fast. All right, here's my take on all this data. I'm leaning toward a watch and gradual accumulation strategy. Don't go all in right now, but start positioning yourself. Primary entry point, $1.14. If it drops more, secondary entry at $1.08. Set your stop loss at $1.02 because nobody likes losing money. First target, $1.74. Final target based on the AI prediction, $2.12. The fear is extreme, the AI is bullish long term. And sometimes the best opportunities come when everyone else is worried. That's it for today. The AI might be onto something big, or we might be in for more choppiness. Either way, having a plan beats flying blind. If this helped you make sense of the chaos, hit that like button and subscribe for more AI-powered market breakdowns. See you next time.